Good morning, traders, and welcome to BCR's morning market analysis. As the US government reopens after the longest shutdown in history, markets are adjusting to new economic clarity. First up, let's have a look at the US dollar index. The DXY fell for a second consecutive week, briefly dipping below 99 as investors took profits following the end of the government shutdown. The reopening removed uncertainty, but the backlog of economic reports may still reveal slower growth, keeping the markets cautious. Technically, the dollar is hovering slightly above 99 near the Bollinger Band middle line at 99.34, with MACD momentum showing signs of easing downward pressure. Key support lies between 98.98 and 99, which is a psychological level, while resistance remains near last week's high of 99.74 and the psychological level of 100. Overall, the dollar is showing tentative signs of stabilization, but its direction will remain sensitive to upcoming data releases. Next up, let's have a look at WTI crude oil, which has continued its downward trajectory, falling below $60 per barrel last week. The market is responding to a combination of easing supply pressures and weaker demand growth, despite potential disruptions from sanctions on Russian exports. Currently trading around 60.45, oil remains constrained within a downward channel, with RSI and MACD both signaling bearish short-term momentum. Immediate support sits at 58.12 to about the psychological level of $58, while resistance is around 60.45 and the 65-day moving average of 61.54. The market is digesting the latest OPEC and IEA reports, which point to higher inventories and slowing consumption, keeping sellers in control for the short term. Next up, let's have a look at gold. Gold saw a very volatile week, initially rising over 5% to a 3-week high before profit-taking pushed prices lower. This buy the rumor, sell the fact dynamic was triggered by the US government reopening and persistent inflationary concerns. Currently, spot gold is trading above the Bollinger Band midline at 40.65, with MACD momentum still positive but slowing down. Key support is around the $4,100 psychological level, while resistance is seen around 4,200 to 4,270. The precious metal is at a critical juncture. Short-term bulls remain in control, but broader trends will depend on upcoming inflation and US employment data, as well as ongoing geopolitical events. Lastly, let's have a look at the Australian dollar, which strengthened to a near 3-week high last week of 65.80, buoyed by stronger than expected employment data and a softer US dollar. Employment rose by 42,200 in October, more than double the forecast, while unemployment fell to 4.3%. The pair is now consolidating above the psychological level of 65 cents, with short-term bullish momentum sustained above the 9-day SMA at 65.15. Support sits around the 65 cent, 65.16 mark, while resistance is seen at the psychological level of 66 cents. Strong domestic fundamentals combined with cautious sentiment around US growth data are helping the Australian dollar maintain strength in the short term. Well, that's all for today's morning market analysis. Traders should keep an eye on key support and resistance levels on charts for short-term trends. As always, manage your risk and happy trading.